irrespective of whatever is inconsistent in the other laws. Now, I'll slightly touch upon the basic concept, the charging section, offense of money laundering. There are three sets of direct or indirect actions which can rope in a person into the money laundering. First is an attempt to indulge in, second is knowingly assisting, thirdly knowingly becoming a party to, or actual involvement in any process or activity connected with the proceeds of crime, section 2U. That is one set of actions. Second set of actions is concealment, possession, acquisition and use of the proceeds of crime, and the final is projecting the proceeds of crime as untainted property. Similarly, claiming the proceeds of crime as untainted property. Now, if we apply this to the present dispensation, demonetization, if by depositing the money in an account, either of one's own or of somebody else's, what you are doing is exactly that whatever could be the proceeds of crime, you are holding out as untainted property. PMLA will hit such transactions squarely. Now, as far as what is the proceeds of crime, it has three limbs. Any property which is derived or obtained directly or indirectly as a result of criminal activity relating to a scheduled offence. Secondly, value of such property is also proceeds of crime. And finally, in respect of the property which is tainted but which is physically located abroad, they have introduced an amendment to rope in such property also in a different way. They say that all right, the value of a property in India which is equivalent to the value of the property which is tainted but which is physically lying abroad, we will take it as a part of the proceeds of crime. The schedule to the Money Laundering Act has a long list of various laws, mainly Indian Penal Code, drug laws, Unlawful Activities Prevention Act, Prevention of Corruption Act. Mr. Moderator Jan Gokhale told me that there is one query on Prevention of Corruption Act and nobody is putting his hand on it. So can we pass it on to you? I said yes, most welcome. We'll deal with it and how dangerous it could be. With apparent impression about a person who is retired IRS, I'll explain at the time when we take the cases. Customs Act, evasion of duty. Straight away, PMLA hits it. Copyright Act, infringement of copyright trademarks, false trademark. I am reading these out because these are the things which are not in public knowledge. For example, I ask a person who has an industrial unit at Vapi, one more at Ankleshwar. He says, we regularly receive Pollution Control Board notices. I explained to him how not replying the show cause notice or the show cause being eventually decided against you could make you liable to PMLA, because the Environment Protection Act, like pollutants, hazardous substances, are also covered. False declaration or document being filed under the Customs Act, again straight away hit. Now I will go to the other act, Benami Act. Let's look at the important provisions. Slide 7. Now here also there are several provisions which are very tricky. They are like lurking danger behind your sofa. When it will pounce on you, you never know. And that is the reason why I am cautioning you that don't take this Benami Act very lightly. Even the Prime Minister has cautioned in public announcement more than once that we are waiting till 31st December. There are several steps lined up by us, one of which he says I am announcing that we are going after Benami law, Benami property after 31st December. My request to all of you is do not take this law very lightly, because there are very stringent provisions. One of which I read, of course we will come to that also during the panel discussion, penalty for false information, section 54. Tell me, where is the escape route once you make a mistake, either as a professional or as a businessman, in providing some information which is proved to be false even though it may have been casually given. According to me, they will rope you in. Again, offences are not cognizable, and again the act to have overriding effect. It is like a sweeping power, irrespective of what is your defense, irrespective of what is your innocence, as long as we find that there is something which we want to do against a particular unlawful act, all the inconsistent things which are lying in other acts will just give a go by. Then there is a Benami property, that is a definition, then the properties definition will deal with that. But the most important and the common thing which we must know in Benami law is this definition of Benami transactions, slide 10. The print definition is very long, but I can tell you there is no rocket science in understanding this. There are 4 limbs of this definition. One is a property transferred to or held by X. Consideration is paid by Y and the property is held for the benefit of Y. That is one. Secondly, it is a fictitious transaction. That is the second category. Third is the transaction where the owner says, sorry, I am not aware of the ownership. I deny that I am an owner. And lastly, payer of the consideration is not traceable, or he is a fictitious person. Now in the first case, there are 4 exceptions which they have rightly provided, that the executor, trustee, partner, director also is, it falls in the first category, but they say they are bona fide transaction, that is an exclusion. Similarly, karta, spouse, child, brother, sister, or lineal descendant or ascendant, they are also of the same type, but they are bona fide cases. There is only one caveat they have put, that in these last 3 cases, karta, spouse, child, brother, sister, or lineal descendant or ascendant, the consideration must be out of the known sources. Similarly, in the last case, payer of consideration is not traceable or fictitious. They say that there is one exception they have provided, section 53 of the Transfer of Property Act, with the caveat that the stamp duty must be paid and registration must have been done, where the ownership is with X and the possession is with Y, because this also is a bona fide transaction, particularly in the case of the developers and the contractors. Reserve Bank has come out with FAQ on 8th of November and will deal with the 3 aspects of the FAQ when we come to the panel discussion. Now my request to the moderator is, time allotted to me was 15 minutes. If I have taken 11 minutes, carry forward 4 minutes for my panel discussion.
Thank you, Dr. Dilip Sheth, for the valuable insight on PMLA and Benami Act. Friends, as it is rightly said, that a discussion is an exchange of knowledge. Our eminent speakers will participate in a panel of discussion moderated by C.A. Jayan Gokhale. He is the senior partner in the leading chartered accountants firm Gokhale & Sathe, has been a member of the Central Council of ICAI for 4 consecutive terms. He was the past chairman of the Expert Advisory Committee of the ICAI as well as the past chairman of WIRC. He has been an eminent speaker at the various conferences and seminars organized by ICAI and other professional bodies in India. I request Honorable Past President C.A. Bhavesh Vora to present a token of appreciation to C.A. Jayant Gokul on behalf of the Chamber. We may proceed with the panel discussion.
Okay, good evening everybody. We are running a bit behind schedule. Bit is an understatement, but of course the provisions being what they are bound to all the faculty having a wealth of knowledge. Let me just begin by acknowledging the presence of so many past presidents of the chamber. Mr. Dastur is here, so many other past presidents of the chamber, managing committee members, members of the Central Council, Regional Council, so many other eminent personalities. All of us, let me make it clear, and whenever on behalf of all the speakers, panelists, we are not here to advise anybody to break the law. We are only here to get academic clarity as to what we ought to do as good citizens and how we ought to guide the citizens in their pursuit of coming clean, if that is the objective of the government. I'll just put down the basic concepts. What we are going to do is we are going to show the queries because it's not going to be possible to run through each of the queries fully. We are going to put up the queries on the screen. Can those at the back see the queries clearly? Balcony? Yes. So I will very quickly just sum up the very fundamental point in the query and then pass it on to the concerned speaker. Okay, this might not be visible. Chamber of Tax Consultants was visible. So what I'll do is I'll just quickly touch upon the highlights. I'm sure the concerned speaker would deal with it. Let me also say to the panelists, we have tried to put their expertise to the best use. They may not be necessarily apportioned in equal measure to all, but I'm sure you will get the wealth of their knowledge transmitted to you in equal measure. So let me start straight away since we are behind time. The first query, first part is going to be dealt with by Mr. Pradeep Kapasi. The case is fairly common that a person who is in employment, very simple facts, regularly filing his return as a salaried person. Over the last 3 years, his average income is 50 lakhs and he has 25 lakhs in currency notes as on the demonetization date. Very generously puts in 2.5 lakhs in 2 separate bank accounts of his wife. Balance 20 lakhs he puts into his own account and says that this is out of his savings. Rather, he puts into his wife's bank account, and the argument being that regularly they were withdrawing 30 to 40,000 per month over the last many years, and this 20 lakhs which has been deposited into the wife's account represents nothing but the household savings which she, unknown to him, has saved in her own capacity. How would this be palatable and what would be the consequences? May I ask Pradeep to tackle that query?
Good evening. As Jan said, this is something which is a common question all of us face, including me, and therefore, should you carry it to the logical conclusion which is desired by the queries? What he seeks to do is he has deposited 5 lakhs rupees in his own bank account, and the remaining 20 lakhs he wanted to put it in the bank account of his wife. The idea was that that whatever withdrawals which were taking place, on an average 35,000 per month had been withdrawn in the last 3 years, and similar pattern was being followed in the earlier 12 years also. All the stories about 15 years on a back-end calculation, I thought that that the lady could have saved about 25% out of whatever had been given to her, that is 35,000, and that would aggregate to some amount, which if aggregated with another past savings, in all over a period of 15 years, she could not have perhaps saved more than 10 lakhs of rupees. Now, if the source is explainable, then she was welcome to have deposited this money if she has been holding in her hand. This is commonly known as a pin-up money or pin money, and that it is this money which she had saved out of the savings. I was very happy that there was a lady who could save so much, because in my case, whatever I give to my wife, she has to add some income, her income to this, before she make the two ends meet. So therefore, if you could save 10 lakhs of rupees over a period of 10 years, Shivram has already told you that there are several cases where if you are in a position to explain the source of cash on hand, then whether it was in the high denomination currency note or not is a secondary question. Now I would believe, considering all the facts and considering the paucity of time also, that I would believe on the facts of the case, even a 10 lakhs rupees, a million rupees being saved and held in cash on hand is something which could have been more than one could have really asked for. As regards he is concerned, we have assumed that he has not been filing balance sheet. We have also assumed that other than these 35,000 rupees a month, he has not been withdrawn anything. And therefore, whatever income he had stood invested in other securities and was fetching income for him. So therefore, other than this, there was no way for him to have withdrawn cash, or at least the question does not show source. I will explain that. Then in such circumstances, as regards the balance 15 lakhs rupees, I would take a view that it is something which he will have to see that whatever other options are available, like what we discussed, there were several possibilities and one of it is to getting into a declaration under this Pradhan Mantri Garib Kalyan Yojana. If he does so, he will have to make the payments of taxes before he files the declaration and also deposit the money.
Of course, I did not, just to keep it simple, we did not bring in the possibility that the person has also got borrowings, etc., which at times is the practical situation, that a person has often taken loans during that period, in which case the whole picture tilts. But nonetheless, without moving into facts which are not stated here, let me, because there is a twist given in this question, that given the same facts, let's look at a situation where the person concerned is a retired IRS officer. And that situation, would you really advise him that yes, if you go by the explanation that Pradeep Bhai mentioned, of course in his case his wife is a chartered accountant, so he has to qualify that it is to the best of his knowledge and belief that she does not have any savings. But nonetheless, if it's in a case of an IRS officer, would you in such a situation advise him that yes, he can go ahead and not file a declaration and try and explain the source, or would he be better off filing a declaration, or would he be worse off? I would ask, because this seems to have other implications other than Income Tax Act. Dr. Dilip said to tackle this part.
See the first, is it okay?
Yeah.
Can you hear?
Yes.
The first question which came to my mind was, what is the total amount we are looking at as a default amount if we were to take a different view? I couldn't find, if somebody can calculate.
20 lakhs.
20 lakhs. Corruption by IRS officer is disqualified. Sorry. What is the figure we are looking at? Anyway, keeping that aside, the humor aside, I think if you look at the Prevention of Corruption Act, the gentleman may be given advice that the definition of public servant does not include retired persons. So the apparent impression which the IRS officer may be given on a casual reading of the Prevention of Corruption Act is that baal bach gaya. I am not in service, I cannot be called public servant, so there is no risk. But if a person goes through carefully under the Act, there are dangerous minefields in this law. Now take a case where this gentleman has retired, but he knows who has succeeded in his chair, and he continues to have contact with him, and they have an arrangement by which still what he was doing during his tenure of service continues being done through the friend of his. In such case, I would request those interested to note down the sections of this Prevention of Corruption Act, section 7, read with the explanation. Now in that section and the explanation they have said that if a person has not become a public servant but he is expected to join the office of a public servant, then the law provides that he will not be charged under this. But they have also clarified that he will be charged for cheating under section 415 of IPC. Now, as we will see during the further debate, cheating is so widely worded, he will definitely get roped in. Then there is one section 12 of the Prevention of Corruption Act where they say it is an abatement to a lawful activity, it is abatement to corruption. So even though he is a retired IRS officer, he cannot escape because the words in that section is whoever, they are not saying public servant. Then there is section 419 of IPC which may apply to him. If he doesn't disclose to the person who gives him the money that he is no longer a public servant or he uses some other name, then he will be charged with personation, section 419 of IPC. What he does with his friend who is in service, in active service, and maybe who has succeeded in, will rope them both in section 120A of IPC, conspiracy. 120B is the punishment, 120 is the definition. Then there are two more sections, section 8 and 9 of Prevention of Corruption Act. They deal with a person influencing the public servant. So if the retired IRS officer influences his friend who is in active service and who is considered as a public servant under the Prevention of Corruption Act, he will be liable. And there is one section, and I can make a humor out of it. Section 14. If a person is a habitual offender committing offence under section 8 and 9, that is, inducing a public servant. Now, I don't think if a person is corrupt, it will be one-time job. So, this section, habitual offender, will straight away hit him. So my view is that even though apparently it seems that Prevention of Corruption Act doesn't apply to him because he is retired and he is no longer in service, there are 6 minefields lying within the Prevention of Corruption Act of which he should be cautious.
Just to supplement, even before, sir, if you, just to supplement, if he was in service, then of course the Act would squarely apply to him. And in such a case, it would be best that he does not go under this sort of a declaration. Is that right?
You are right. I was just cautioning about a situation where a public servant, after retirement, thinks that I am no longer within the regime of this Act. So I thought that better cautioning.
You are right in restricting yourself to the query raised, absolutely.
Right.
But just for the benefit of the audience, I thought let me make the distinction. A retired person is what at length Dr. said dealt with.
I
But
want to add one line.
Yes,
I'm not
please.
sure about it. The judgment of the Constitutional Supreme Court in Justice Veeraswamy's case was Chief Judge, was a retired judge. They say it's a public servant. What is my recollection is, he doesn't need a sanction. For constituting public servant in the IPC, and this sanction is required, prior sanction of the authority is required. But our Supreme Court has interpreted and said if he is retired, sanction is not required. So maybe I'm not sure about it because it's not my field. My recollection is he will be liable even after retirement for the past offences. When he is in service, sanction will be required Now sanction may not be required. That may be, that's what I'm thinking.
In fact, this
Even
question,
graver than Sarah's point.
if I may just add to the thought process that has been sparked off, this question was also triggered by another fact that the issue arose